I've made over $6,000 trading this easy, simple strategy, and I haven't lost in 3 months. Now, if we just skip forward, as you can see, all green days. Now, this is due to my extremely high win rate. My win rate is 95%, if you're wondering, and I'm just trading one pair at a specific time. That is all I'm doing, basically. There is not much more to it. Now, as you can see, the graph is looking very professional. At the very start, we had a couple of losses. I had to get used to the new system that I was developing, but after quite some time, you can see we didn't take a single fucking loss. Now, if you want to check if I actually took the trades, I have been sharing all of my trades in Discord, and you can also see from the profits we are really making bread in here. Trading does not need to be complicated. That's why we're going to keep it very simple for this one. The reason why I'm so profitable is because I'm managing my risk very well. Now, I have prepared for you a little graph. Personally, I focus on a low risk reward and I focus on a very high win rate. Because for me personally, it's easy to win a lot of the times instead of just losing and having a 20 to 30% win rate. But then I have to be able to, basically lose 5 times in a row. And that is basically not good for my psychology. I rather win a lot of the times and even having a negative risk to reward. Because in the end of the day, it's very profitable. Now, I personally have a 95% win rate. And as you can see, probability of losing 10 trades in a row, it is basically 0, 0, 0, 0, 0. It list goes on and then 9, 8. Now, just to put that into a perspective compared to the other ones, right? Now, if you have a 35% win rate or a 40% win rate, that would mean that getting 10 trades in a row is also very unlikely, but it is much more likely compared to 95%, okay? Now, a lot of traders claim that they have a 70, 60, 85% or whatever it is win rate, but that is not the case. If you're having this kind of win rate and also having a high risk reward, you will be the richest man on earth. That's why I'm quickly explaining to you that this is not possible. If you want to have a high win rate, you have to be okay with having a low risk reward. This is basically all that we focus on in here. Now, to put this number into perspective, when you have a 95% win rate, it's never going to be totally impossible, but you get to a point where it's literally basically almost impossible, okay? I mean, it can never be zero, but just as a perspective, flipping a coin and getting heads 36 times in a row is 1 in 86 billion. But losing this many times is still less likely. Winning the Powerball jackpot twice in your lifetime, each win 1 in 292 million, still this one is less likely going to happen. Being struck by lightning 5 times in your lifetime, 1 to 10 billion, still this one is less likely. Now, and you get the point, losing this many times in a row is basically impossible. Now, in order to have such a high win rate, your psychology doesn't have to be strong that much compared to when you have a 20, 30 or 40% win rate. Now, the point that I'm trying to make here is that normally the progress as a trader goes like this. So you go up, you have a little bit of upsides, right? You have a little bit of profit, but then you're stuck basically in this consolidation range and it doesn't go anywhere from the here on. But the trader who has a high win rate, he's okay with having that kind of low risk reward because he makes consistent gains over time. Sure, he will have that kind of dip over time, right? That is completely normal. But he will quickly shoot up onto the air because he's able to compound his gains very easily. Now, the guy who's always having a 20, 30 or 40% win rate, he's not able to compound as good because as he's doing all of the trades, right? So I just say he has 1 win, but then he has 2 losses, right? He's not really able to compound it. And even after that one win, if he now compounds, right? Basically, that means that he's also risking more. If he now loses 2 times in a row, okay? So 2 losses. Now, of course, the same could be said if you have a low risk reward, but it is not the same. Because when you have such a high win rate, it becomes extremely unlikely to even just lose once. The odds of even just losing once are so unlikely that it's not going to happen. I'm not saying that you're not going to win every single day, because not even I win every single day, but you get super close to basically being immortal by the market. Now, so what do I mean by having a low risk reward? This is the kind of low risk reward that I'm talking about. So you're risking 1 to gain 0.2, for example, okay? So sometimes it's a 0.3, maybe even a 0.4, but most of the times you are likely going to stick to the 0.2 because that has shown statistically and also from a lot of backtesting that this is going to be the most likely outcome, right? This is pretty much the only way you're going to achieve a 95% win rate. And this is not just some random trade that I've drawn onto the chart. As you can see, one of my very recent students have actually taken the trade. And as you can see, he made easy 100 bucks on that trade just following my signal. Literally that easy. And the strategy is extremely simple. I just look for higher time frame liquidity points. In this example, you can see that we have multiple highs being relatively equal close to each other. And that's basically a very easy drawn liquidity. But that is not everything. I'm also looking for the previous day high or the previous day low. That is basically all you need to trade my strategy. Now, of course, there's a little bit more into it. I'm looking for previous day highs and lows, which are very easy to get hit. Now, if we have this candle and this next candle is about to open, I'm looking for this one to go onto the upside. Why is that? Because this candle right in here, so basically this one has displaced above the previous one. So what is more likely going to happen? Are we going for that high or for that low? I mean, of course, we're going for that high. So we're just going to trade it onto the upside for the next candle that is about to open right in here, okay? Now, the same principle applies right in here. As you can see, we have relative equal highs. The next thing that I want to do after the relative equal highs are being confirmed, I'm just going to take a long onto the upside, trading into the relative equal highs. Mostly, I'm even just going below that just to be very safe because I only take the most best trading setups and I want my TP to hit. Okay, that is all that I'm looking for. I just want to make money. I'm in the market and I'm out of it. I'm just longing into the higher time frame relative equal highs. And then my stop loss is very wide. Now, in this case, it is actually below this low. It's a very old low and is not likely to be hit. Even if we go lower right in here, way more likely that we will still take out the relative equal highs first before going lower, right? This could even look something like this, where we go into a little bit of drawdown, consolidate, and then we go for this relative equal high that I just plotted out. So you have to be very patient, right? Your psychology has to be online, because if you close the trade anywhere in here, or maybe you just think like, okay, we're not going to hit the stop loss anyways, I'm just going for a stop loss that is even tighter because I want a 1-for-1. This is the only way how you're going to achieve a 95% win rate. There's no other way. Don't listen to anybody else. It's all a scam. Now, I am going to be honest with you. You need to journal your trades. If you're not going to journal your trades, then this is not going to work out, because that is the only reason I'm able to pull all of this off. I have taken a lot of trades in backtesting. I've journaled the trades. I've gone back and forth, what works, what doesn't, and then I've actually found something that works in the market. And I've been just doing that over and over again. I'm doing the same thing every single day, to the point where it's just boring, right? I'm not even doing something else. Now let's talk about the elephant in the room, and basically a very common argument that I keep on hearing. For example, the traditional way of trading is, okay, you're risking 1 to gain 3, okay? Then eventually you might win. Okay, let's just say this was like that. You win and you have 3. Now if you lose 1. But my way of trading is having a lower risk reward. Now, when some people like to say that, okay, well, if you're losing, the account is gone. Are you stupid or what? Come on, man. I'm not trying to insult you, but you're really stupid if you're thinking that this is actual reality. I'm only risking 1%, okay? I'm only risking 1% per trade. So if I lose, I only lose 1%. But now they say, okay, when you win, you only gain what, 2 cents? No, I gain 200, right? On a 100K account, bear in mind, I have multiple 100K accounts, and the journal that I've shown you previously is just one of them, right? So basically I have to combine that x5, because I have more than 500K in total funding with prop firms, and I've been also interviewed. You can check it all out yourself. I'm not going to show it in this video. So on the trade, I am going to make 200 at least. Combining with all of the other accounts, it's even more. They say, okay, but when you lose so much. So no, I am not going to lose more. I'm going to lose the same amount as someone who has taken basically a 1% trade with a 2 risk to reward, okay? Since the win rate is so high, right? I'm just plotting out random trades just to showcase it to you in a different perspective. So right now we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades. If I lose one of them, basically 5 trades worth of progress is gone. But then the next trade that we're going to take is not going to be a 0.2 risk reward, it's going to be a 0.5, right? So now we only need 2 trades to recover it. Normally, you would need 5 more trades in order to recover the one loss that you have gotten previously. But doing this way is way easier, and especially if done right. Now you might say, but when you have a 0.5 risk to reward, your win rate decreases. No, I've actually gone through it very hardly. Once you take a loss, it is very unlikely that you are going to take another loss in a row, which allows me to basically use the risk management, this advanced risk management strategy of gaining more, right? So it only takes us 1 to 2 wins to recover the entire loss. And after we have recovered the entire loss, we just go back onto the 0.2 and we just keep on trading and trading. Now, this doesn't mean that any other way of trading doesn't work, but let's be all honest. We have all tried to trade it this way, okay? Having a 0.2, and it simply doesn't work. Now, I know that a lot of traders are pretty dumb individuals and they don't like to admit that they're not profitable and their system doesn't work. That's why, once again, you have to journal your trades. If you're not journaling your trades, documenting what the backtesting results have given you, then you're lost. Now, to put it in a very simple perspective, every trade you see on the chart is a 1-for-1. So if you win, you gain 1. If you lose 1, okay? It's the same for every single trade. and the win rate is 50%. So you're losing, winning, losing, winning, losing, winning. Now, of course, this is not going to look every single time like this. You're going to have 2, 3, or maybe 4 wins in a row if you're lucky, but also having 4, maybe 3 losses in a row if you're unlucky, okay? But that is basically resulting to us having 0. Now we have taken 50 wins, 50 losses, risk 1%, but we have not made any money and actually lost because of the fees. Now, this means that your strategy does not have edge. In order to be profitable with those kinds of statistics, your win rate needs to be higher than 50%, ideally at least even 60%, because the fees are just going to eat you up. Now, here's what we do. We have a low risk reward and we just keep on winning and winning and winning. Now, of course, we're not going to win every single time. So we have just lost a trade, we have lost another one, and a couple of more. No problem. We're going to recover all of them. Now, as you can see, we have taken a couple of losses, and fairly big losses if you want it like that, even though I've just explained to you that it's really just 1%. Now we have taken 100 trades, 95 wins, 5 losses, risk 1%, and in total we have made 23%. This is just another perspective of showing you how this way of trading works, and it's profitable, and it's made me so much money. You can just copy me. Now, I have also previously said to you that I'm not just looking out for relative equal highs and lows, and also not the previous day low and high. I'm also looking out for FEGs, which is another very form of easy liquidity that has to be taken out. Now, this day right in here was a very unusual day, because if you go back into the chart, this is another thing that I've been trading, and it's literally so simple. Go back into the chart, you will see it yourself. You will see how easy this actually is, okay, if you're just staying disciplined. As you can see, every single daily candle we're on a daily chart is taking out either the high or the low of the previous day candle. So this one took the high, this one took the high, this one took the high, and we're going to take out either the high or the low. Rarely, in rare scenarios, we're either not going to take either direction or both of them, okay? There's a rare occurrence. Just by knowing that fact, that basically 90% of the time we're going for the high or the low, you're making this way more complicated than it has to be. It will not be a 50-50 if you're actually trading a 1 for 2. Then it's not 50-50 anymore, because now you have to time the market very well, because you can be even very right on the entire direction, okay? As you can see, it actually got into our take profit, the trader who took this trade, but he got stopped up beforehand because you have to time the market well. With this way of trading, you don't have to time it well. You only have to be right on the next draw on liquidity. We only care about where the price is going to go next. We don't care about timing. We're not trying to bottom tick. Now, bottom ticking and top ticking is another topic in itself. Sorry to break it to you, but it does not work. Now, as you can see, this is a very classic day. Where are we going to go? Are we going to shoot for the previous day high or the previous day low? Take a guess, but it's very easy and very obvious. We're going to go for the previous day high. Why is that? We already had basically a very bullish up candle. So what's more likely to happen? For the entire candle to make a 360 on us and go all the way for that low, right, which is basically 27 pips. Now 27 pips to a lot of you guys seems like this is not much. We can definitely do that, but on this pair specifically, this is a lot, so it's not going to happen. Now, I don't know when you're seeing this video, but check the chart out yourself. You will see that I was right on this. We will go for the previous day high, which means you can literally take a trade right now and trade it on to the previous day high. You have made it this far into the video, and let me be very clear about this one. You can go 2 paths in trading. Either you're taking the path that I had to take, which led me to countless of profit challenges being blown, and also personal accounts that I have lost. The list goes on. Or you can also take the shortcut, being mentored by somebody who has 5 years of experience, more than 500k in total funding, and also multiple prop firms. Now, I have been interviewed by prop firms where I basically explain how I've gotten to all of those payouts. When you're trading for this long, your win rate is extremely high. That is why we barely get into any kind of drawdown. Now, and this is not just a regular mentorship, you will get access to everything I have learned over the past 5 years of experience. So if you want to learn how to get the same results, it's the first link in the description.